Hello everyone, welcome to the HDFC Securities webinar. Today's topic would be technical and chart analysis part 3. So we've already done two parts. Before we begin for the begin with the part 3, we would be taking a recap of the part 1 and part 2. A very quick recap, nothing too much in details. As usual, we'll try to stick to the complete basics of it. Just two patterns we'll pick up. We'll understand what it means and how to go about it. And then in the end of the webinar, we'll also try to look at some live stocks with the live examples, and we'll see if we are able to come up with any patterns. So we'll do it together. We'll do it side by side, on the spot. There's nothing that we've done it before already, so there's no, glitch over there, right? So I hope my screen is, I hope you all can see my screen. Right, so let's begin with it. So first we'll take a quick recap. In the first part of the technical, we understood about RSI, that's a relative strength index, moving averages, support and resistance. So you remember, if RSI, what I said was, if your RSI of a stock is below 30, it's considered as oversold, and the stock may bounce back from there. And if the stock's RSI, that's your relative strength index, is above 70, then it's considered to be overbought, where the stock can give some kind of minor corrections. Obviously, there is nothing that it must rebound or bounce back from 30 or 70 levels only. It can be like it can go from 28, it can come from 72, it can happen as so, but generally that percentage is calculated as such. Moving averages, if you remember, you can go for short term, long term, medium term moving averages. You can plot 10, 20, 30, 50 days moving average, 100 days, 200 days moving average. And we remember the principal rule of the moving average, where if a short term moving average was crossing below a long term moving average, it was considered as a bearish sentiment, and vice versa. And then we looked upon how to just simply see support and resistance by understanding the maximum lows a stock has hit and the maximum highs that a stock has hit over a trading period of days or a pattern, or some days. And hence this is how we understood about the support and resistance. In the part two, we were understanding about the head and shoulder pattern and the double bottom pattern, if you all remember. So the head and shoulder pattern was mostly to do with how it was predicting from a bullish to a bearish trend reversal, and that's what the head and shoulder pattern was, where it had two shoulders and a peak that was known as your head, and there was a neckline. And if the stock falls below it, then the stock was already in a bullish trend, but the moment it falls below the neckline, it becomes a bearish line. And this is somehow how the head and shoulder pattern was mostly looking like. You can see the 1 and 3 are your shoulders, your 2 is the head, and you can see the neckline. So the moment the stock falls below that neckline, there is a significant bearish movement that you can see. Right, so this was your head and shoulders pattern. And then we looked at something called a double bottom pattern. If you remember, these two patterns were your reversal patterns. It means that the stock is going in one particular trend, and the moment you're able to spot these patterns, they give you some kind of reversal in the trend of the particular stock. So your double bottom pattern was something that looks like the alphabet W, and the moment stock crosses all those high point, that becomes the breakout point, and from there the stock takes a bullish sentiment. So it's a bullish pattern altogether. So this is what we read. And again, today when we do the chart exercise, live stock chart exercise, we would be going and we would be plotting the RSI, moving averages, support, resistance. So we'll be taking a recap of all the patterns that we've done today. In today's session, we would be considering two patterns. One would be an inverted head and shoulder pattern, which is just the opposite of the head and shoulder pattern that we can see over here. And the other pattern that we'll understand would be a double top pattern. So earlier we did double bottom, today we would be doing double top, right? So let's go ahead with the inverse head and shoulder pattern. So like we've understood the head and shoulder pattern already, this inverse head and shoulder pattern is just the opposite of it. It's just inverted. It is also called as your head and shoulders bottom. Why is it inverse? Because these pattern is similar to the head and shoulder. Here also you'll have two shoulders and one head. Only thing is that where this pattern is inverted. The normal head and shoulder pattern was a bullish to bearish trend reversal. This pattern, inverse head and shoulder pattern, will give you a bearish to bullish trend reversal. So it's inverted. It gives you a bullish sentiment because upon completion, the moment the breakout comes above that neckline that we'll see, the stock starts to give a bullish trend, a rally sort of a pattern. So investors will typically enter into the long position only when the price will rise above that resistance line of the neckline. So we will see the graph of it where the neckline is, and the moment the stock moves or crosses that neckline, you can see the price will start to move up. So investors must enter into position when the stock breaks above that neckline. But there are three important components that we must remember when we are looking at an inverse head and shoulder pattern. Like again, there would be two shoulders and one head. What happens is that when a stock is in a long bearish trend, the price will first fall down. Then it will rise to some, give you kind of a rebound. Now it rises to a peak and you have the first pattern already formed. The first shoulder is already there. After that peak, the stock will again fall down to form a second trough. And this time, the moment it falls, this fall has to be lower than that previous low it had done. Now back from there, again it will make another rise. So here you can see that the price will time, then again from there it will again rise before rising and giving that breakout above the above that particular pattern that you have, the neckline that you have. So this becomes an inverse head and shoulder. Now as always, we must remember two principles. Any pattern, be it head and shoulder, be it double bottom, double top, be it channel patterns, trend lines, whatever it may be, it is always important to back any of these patterns by volume action. So if you can see heavy volumes coming in with the pattern, then there's a double conviction of your pattern to go right the way it's supposed to be, and your prediction or your analysis can come out right. So I hope you can imagine an inverse head and shoulder. Let us see the difference between your head and shoulder and inverse head and shoulder before we move ahead to plot on the charts. So a head and shoulder will predict a reversal in uptrend. So the stock was continuously in uptrend, but the moment you've spotted the head and shoulder, it will show that there the trend is changed. It's reversing. From bullish, it will become more like a bearish trend. And the inverse head and shoulder pattern is the opposite of that. Over here, the stock, the pattern is to predict the breakout on the upside. So like I said, volume confirmation is very important at the time of breaking above that neckline that we have. So how does a head and shoulder pattern look like? This was your head and shoulder pattern. As you can see, there are two shoulders and a head. The low, the moment the first shoulder is formed and the stock starts to fall down, then again it rises up to form a head, then again it falls down. So both the times when the stock is falling down, you can see that the low point is almost similar. That is where you draw a neckline. Now next, again it takes support of this neckline, it bounces slightly up, but this time that it bounces back up, the high point is lower than that first previous shoulder that you can see. From there again it starts to fall. Now here would be your confirmation that it has formed a shoulder, head, shoulder. So it's a head and shoulder pattern. The moment the stock is closing below that neckline, you have a reversal confirmation and the stock is to go down. Now how does the inverse head and shoulder look like? This is how an inverse head and shoulder look like. It's just the opposite that you can see. The stock was kind of in a bearish trend. You can see this huge red candle, long red candle that you can see. It falls down, then the next candle is also negative, so it's showing you a shoulder, the first shoulder that has formed, because from there the stock is slowly gradually rising. It's a very small rise that you can see. It touches, and again there are two more red candles, the stock starts to fall. It falls much below than that first fall that it had where the shoulder was formed. Now this fall is going, it's showing you a head over here. Then again the stock starts to rise back very gradually, very slowly. Then again from there it falls for the third time. Now here a second shoulder gets formed. So you can see that there are two shoulders, and in the middle there's the head, right? So both the shoulders are almost at the same low level. So where circles you can see of the shoulder, that is the low point that the stock made to form that pattern. It is very important to remember that in real examples, it may not always happen that both the shoulders will have the exact same low lines. It does not happen. It may vary to some extent, right? So here you can see, and the head also the form that you can see. So once the second shoulder is formed, the stock starts to rise up again, and there's a neckline. The moment it goes above the neckline, there is a rally that comes in the picture. How do you find the neckline? The first shoulder, after the first shoulder that has been formed, when the stock is rising back again, and you can see there is a red line. There are continuous three candles that you can see with similar highs that it has made before it finally formed a red candle, and the stock fell for the first time. That's the second time that it's falling to form the head. So right above it, where the stock was facing that resistance, from there you draw a straight line. That should be your neckline. The moment stock rises above this neckline, your reversal has come in the stock, and now it is about ready to give you a rally. Right, so this is the difference between your head and shoulder and inverse head and shoulder. So head and shoulder is from bullish to bearish, inverse head and shoulder is from bearish to bullish. Right, so we'll plot live examples. We'll see if we can find any of the patterns. It's not necessary that we would be only looking for inverse head and shoulder. Let me tell you that if we come across any stock where we're seeing a head and shoulder pattern, that would be more like a good revision for us. Right, so let us look for all the patterns. The next pattern also double top. Let me take you quickly through it before we go to the live charts. So like the name suggests, you can already guess that a double top pattern means where the stock is making two peaks, two highs, and then what happens? So double top pattern is a bearish pattern, extremely bearish. The reason is because there are two times the stock has made very high, quite a high or peaks point, and there is a moderate decline in between. So it somewhat looks like an M. If you remember our part 2 webinar, we studied the double bottom pattern, and the double bottom pattern was similar to the alphabet W. Now double top pattern is similar to the alphabet M. It is similar. I'm not saying it's exactly like the alphabet M. So it resembles. So you can see how M has two tops and there's this decline in between. So double top also resembles the symbol of alphabet. This is how a double top pattern looks like. You can see the stock rises completely from the red candle. There's a green, red, then again it rises up. It creates the first top that you can see that makes. That red candle, you can see there is a wick, there's this line, it's called a wick. So you can see it's made the first high top. It falls from there, and then again the red candle is formed. Then again from that same red candle support, same open, same close, the next day there's a huge green candle that you can see in middle, right? So that is where your support lies, because continuously for 3 days the stock has been holding that open opening point, and hence you can draw your neckline over there. So again stock rises from there back again. It creates another new high. Not necessarily that it has to be in just one candle. It can be 2-3 candles together at the same level of the high point. The moment from there the resistance, it faces the resistance over there, and the stock starts to fall down, and it first takes the support where the neckline is. The moment stock crosses below or falls below this neckline, you are sure that this is a double top or bottom, sorry, double top pattern, and the stock is to only fall from here. So hence, this is an extremely bearish pattern. So if a double top occurs, the second rounded top will usually be slightly below the first rounded. So you can see that the first top that you're seeing over here is a little higher than the second top that you're seeing, two tops, right? So that is trying to indicate that it's resistance, the stock has exhausted its high rally, whatever it means, and now it is ready for a correction. Correction gets confirmed only when it breaks the neckline. Now, very important for us to understand is that there can be certain cases where you are simply looking at a chart and you think that this is where the stock makes a high, it falls, and again it makes another high, it falls, and you would think that a double top pattern is confirmed. It does not happen as such. You must be aware of any false double top that it makes. There can be a false breakout also. Only when the stock is in a continuous bullish trend, and from there it's trying to form two new tops, and from there it falls down, that is where you are supposed to locate a double top. It does not mean that the stock is continuously consolidating for quite some time and then it makes a little high, then falls, then makes another little high, then falls, and that is where you would think a double top pattern has happened. So it doesn't happen. A double top has to happen only when the stock is at its peak, at its high, at its really new high, maybe a 52-week high, maybe a new lifetime high, something of that sort, where you must understand where to book profits and where you must start selling the stock. Right, so now we've understood inverse head and shoulder and double top pattern, and previously we've understood head and shoulders and double bottom pattern, right? So let us look at we'll go and we'll start to plot it on the charts. So let me share my screen where the chart is, just a moment. I hope my screen is visible to all of you, right? So you can see once again, I would be showing you a pro terminal. This is a pro terminal. It has excellent charting tools. As you can see, we have got more than 100 plus studies, indicators, everything combined. And this is our advanced trading platform. You can we'll talk about pro terminal later on. Now the moment we come to the chart option over here, you click on the charts. Once you've logged in, you go to the pro terminal. Here is your charts. You've come to the charts. So by default, you're coming to the 1 minute chart, right? So how we did, so you can plot any days or any time interval that you're comfortable with. Just for over here, for hypothetically, we'll consider a 1 minute chart. By default, you will come as a Nifty 50 chart. Obviously, now we'll have to take through the moving averages. We'll have to put the RSI and studies. It comes under studies, all your moving averages. You can see over here the moving average, right? So you'll have to fill in like 50 and pick your color, everything. Once you do done, it's done, right? So this is how you'll have to do, although I'll not waste much time on showing you to add all these studies once again. We've done that before. So I've saved my study already. So I'll simply go and click on my study. So all my moving averages are added, my RSI is added and everything. And I would prefer, let's go for a 1 day chart, right? So this is where we see. So once again, let us remember what we studied. Your moving averages, the white line you can see is my 50 days moving average. The red line you can see is a 20-day moving average. The yellowish greenish line you can see is a 10-day moving average. And if you remember, I said that moving averages not only helps you to understand with crossovers, but it will also try to show you any kind of support or resistance. If the stock candle is falling on the line of the moving average, it can act somewhat like a support, or if it's on the upside, then it can act like a resistance, right? So over here you can see, if you remember the crossovers, 10-day moving average was trying to cross over and the 20-day moving average went up. So here is a reversal. You can see the stock took the support from the 50-day moving average, and there are the 2 green candles. Right, but anyway, I do not see any pattern over here as such. I don't see head and shoulder or any other pattern that we can say. Now let's understand. Let us go to any other stock. We'll randomly pick select stocks just to see if we see any patterns. I have, if you have any stock in mind, you can just type it. Also, I can see. Uh, Mr. We'll take the questions later, but I think there are no preferences of our audience. Whichever stock you all want, you can type it. I'll look at that chart itself, but there's no such preference. Let us. All right, so let's pick up any stock. Let's go for ITC. That's on the top of my mind that I can think of right now. All right, so here is the ITC one-day chart that we can see. RSI is neutral. I think it's around 40. That's all right. We've seen the stock has given a red candle, means a slightly negative candle. All right, the stock is over here. So there are any patterns that if we can see, I don't see any such patterns over here. Not even on one-day chart, not even on a weekly chart. If we can see, I guess not. Nothing from here. So I think during the day I was trying to plot one stock which is there for you to give a good example. I'd seen Apollo Tires. Apollo Tires had shown me 3 patterns altogether. 2 patterns we've already learned. So it was in the weekly chart, if I remember correctly. Today I was seeing, right? So yes, this would be a perfect example. I don't know if you guys, I mean, if this were a classroom, we would have a good interaction, but because this is a webinar, let me just take you quickly. There is a head and shoulder pattern that I can see. It's a head and shoulder, not inverted head and shoulder. I'm talking about head and shoulder. And there is a double top pattern also. And obviously there is a channel pattern, but since we've not studied channel pattern, I'll not take you up to that. Over here, you can see, please focus on my cursor. I'll zoom in. I'm sorry. So over here, you can see that there is one huge green candle. It made a new high. Another next day's candle was again high. You can see that this point was the top of it where it went. Then again you can see there is another long wick you can see, and a small red candle over here, but there's a small really long wick. It means that this point is where the stock faced the high point. It was somewhere around 307, right? Then the stock fell quite a little. There's this decline you can see. It first moved up and there's a decline. Over here, you can see where the cursor is moving. It made a decline. Now this red candle, please focus on it. The low of that day was 246.35. The next day, there's a small green candle, this one, right? And you can see the low point, the low wick point of both these candles almost the same, which is around 246 again. As you can see, this day's low is 246.35. This day's low is also 246.65. So this is where your neckline is to be drawn. Both the candle, the low wick, this is where your neckline is to be drawn. The stock has rebounded from here. It makes another slightly top. If you remember, the first top should be slightly higher. This top should be slightly lower. So you can see it's if you zoom out of it, it shows you a very disfigured kind of M. Not very disfigured. I'm not saying it's an exact M like such, but yeah, it's there. So this is a confirmation of your double top. Here is the first top. Here is your second top. This is your neckline. Now, the moment you see the neckline got broken over here, this red candle, it gave a small, it broke, it must have broken the neckline on intraday, but it closed above the neckline. But the next day, you can see the stock again came down below that neckline and it opened, it closed also. And from there, you can see the stock has shown you a very downfall movement. So this is what double top pattern means. It is showing you 2 high peaks, 2 tops, and that is the reversal point. The moment the stock is falling below the neckline, the stock has given a very serious correction. Since this is a weekly chart, let us look at the high point. Stock made a high of 307 on that first high. The second high was 299.5. So 307 first high, second high is 299.5. Both the tops are formed. Now the stock falls 246. It broke 246 on this day, and today you can see from 246 the stock has fallen to 200. This is the entire week's fall from 246 to 200, right? So this is how a double top pattern has been formed, and it is showing you the reversal of this stock that was around 300. It's fallen by 100 points almost. So this is the strength of patterns that can work. Like I said, I can also see there is a small, the double top is also colliding with a head and shoulder pattern. Now please focus on my cursor movement over here. You can see this round is your first head, sorry, your first shoulder, I'm sorry, shoulder. There's another peak which forms like a head, and there is another shoulder that you can see, right? So here, here, and here, two shoulders and the head, and the neckline is almost the same, perfectly the same. 246, 247, here is where your neckline is. It breaks. So there are two patterns combined and colliding together over here. It's not just double top, it's also head and shoulder that you can see. The moment it breaks, it has fallen down below, right? So this is how it works. This is how all these patterns, they can help you to understand and see. And plus, because this pattern was seen on a weekly chart, a weekly time frame, hence the impact was a little stronger, hence the stock fell like so drastically. Had it been a daily chart, the impact would be equal accordingly. If it were a minute, 1 minute, 2 minute chart, the impact would be similar ways. Right, so I think that's all about for today. We would be running out of time. I could not find the inverted head and shoulder pattern. Maybe if in the next session I'm able to locate any inverted head and shoulder pattern, I would keep that ready. We'll plot it again. So it's time for some question and answer. Let's see all the questions. Okay, yeah, Mr. Sabita Murthy is asking, please show the volume to confirm the chart pattern. That's a good question. That's a good query. Exactly. So I hope my, I hope it is visible. My screen is visible. We did not plot the volume along with this. Let us add the volume chart. Go under studies. Under here, you would come as the volume chart, right? So locate on the volume chart. Now we were trying to locate over here. This was the first day trading. You can see this too, right? So this green and this red. Now the red has crossed the last 1, 2, 3, 4, 5, 6, 7, 8, 9. The last 8 to 9 trading sessions, you can see the volume has surpassed. So this was a good confirmation. Now the next top that we saw was over here, right? So over here again, you can see this is a huge volume that is created, almost 20.2 million shares. The 20 million shares over here, you can see. So that's also a very good volume. And if you would just simply place your crossover line over here, you can see that this red bar, you can see the huge volume. It's red because the stock closed on a negative point. That's a reason. Does not mean we've just color coded the volume chart bars over here. So here you can see this volume is significantly higher than past many trading sessions. So this was a confirmation of the second. Like I said, the volume along with the pattern is very important. So you can see both the day's pattern, along with it, it was making decent volumes, right? So here is where the volume is. Mr. Pavan Sharma is asking, please explain, be clear about the neckline. Okay, I lost it. How can it be drawn? Mr. Pavan, the method to draw the neckline is, focus on my screen. I hope it's on my screen only. I'm sorry, I just went a little too ahead. Right, so here is the first top that got created. It came down. Here you can see. Here's a huge red candle with this wick over here that you can see, right? The next day, the stock held the previous day's low. That same wick was formed. Low for both the days was same, and this was the first small reversal that it showed, small bounce back from the continuous fall. So hence, when these 2 days, you can see that the candle has formed almost similar lows of 246, and the stock again moves back up. So 246 becomes your neckline. So the moment the stock has to cross below 246, it will be a confirmation of the pattern. That's how you draw a neckline. Mr. Pavan Sharma is asking if the volume includes FNO only or cash. This is the cash chart that I put in. So the volume is only of the cash, not for FNO right now. So if you're looking at the cash chart, then you would be looking at the cash volume. Mr. Rahul is asking, we can also see the M pattern at the right of the chart. Is it again showing the bearish sentiments? Let's see where we find the M. I don't think this is exactly a M, right? What is M exactly, Mr. Rahul? Here is where we are trying to locate a false double top. Please try to understand, I said that double top pattern is what looks like an M, right? So this is the M. And the stock was at its high time, where it was trading around 307. At that point, the moment it shows these two top, that is where the pattern is. The M pattern works. Right now, if you're trying to say that this looks like a M, I don't think so. It looks like an M exactly. And also, the stock is not at its peak. It's not at its high level. Right, so this could be a confirmation. Obviously, the stock is already going down, but then if you have to draw your neckline over here, I don't think that it's breaking that neckline as such. So this would be a false understanding of the false breakout, a false, M pattern that you're trying to locate. It won't be exactly right. Okay. Mr. Ravi is asking if there's a list of, is there a list of popular tools and how to use them on Pro Terminal? Mr. Ravi, this is what exactly we're trying to do. We're trying to tell you all those tools such as RSI, volume, support, resistance, moving averages, any kind of patterns. And you can locate this on Pro Terminal. You can locate these indicators on any chart software that you can get. Mr. Amit is asking, is the recording available for previous two webinars? Yes, I would like to tell you that we upload all our recorded webinars in our YouTube channel. So all you have to do is just go to YouTube and search for HDFC Securities webinar. Under that, you would see all our recorded webinars that we've done till date, not just about technicals, but about derivatives also we've done. I have done it. So you get all the webinars over there. There itself, you can find the technical and chart analysis part 1 and part 2. It's uploaded, and we would be uploading today's webinar also shortly in a days or 2 days time. Sorry. Mr. Ashok Nair is asking, is it mandatory that the second peak has to be lower than the first one, or can it be the other way around, that the first peak is lower than the second? Mr. Ashok, the theory says that it has to be compulsorily in that way, that the second peak has to be slightly lower than the first one, then only the pattern gets confirmed. However, sometimes it may be very minor difference that looks like it's on a similar platform to our naked eyes, but it may be that we think that there is no such peak or something, or both the peaks are at similar levels. It can happen as so. But then yes, theory has always said, and practically also we just saw that the second peak must be lower than the first to give it a better conviction to it. Right, so I guess this is all that we can answer to the questions right now. It's already beyond our time. The next webinar, the last webinar that we'll do on this technical and chart analysis would be on Saturday at 12 p.m. this coming Saturday, that's 29 June. You can log in, you can watch all the 3 parts before you come to the 4th and final part, where we would be understanding, we learn to plot some channel patterns, trend lines, and so on. So that's what we would be covering in a fourth part. I guess that's all I can say. Thank you so much. I hope this has been useful to all of you, and looking forward to see you guys again. Thank you so much for joining. That's all that we'll be doing today. Thank you.